The big global event is finally here, and the US Federal Reserve has decided to hike rates. While all economies, including India, will see some impact, but should retail investors be concerned? Let's find out.
I think for retail investors, I think the markets have already corrected. You've seen a decent correction in the market, partly because of the expectation of a Fed interest rate hike, and also because of some of the other global factors. And the valuations have also corrected. So yeah, there could be some more volatility which could be around the corner, but I don't think retail investors should really bother too much about that. I think it's a good opportunity to invest, and whatever bottom-up exercise what we have done on the companies looking into the next fiscal year suggests to us that even in an environment where global growth is going to be a little tepid, I think Indian corporates can show a decent growth going forward.
As far as the current situation is concerned, clearly Fed rate hike is already priced in. Obviously things could change, but I think that is something that the retail investor I think should ignore, or should have access to advisors who can tell him what to do.
As a planner, Priyal, I would always recommend that look back to your own situation rather than external, because externally always things would be happening. Your requirement for funds will not change. So if you have a family marriage or a higher education funds requirement or a vacation, you're not going to change those based on external conditions. Your internal conditions is what you are investing for. The only caution that needs to be taken is ensure that your near-term money is parked in either a liquid fund or a FD or something which does not get drastically impacted by outside external conditions, and then just continue. Long-term money staying in equity is perfectly fine. So as long as your investments are aligned to your condition and not an external condition, you are fine. If they are aligned to external conditions, that should not have been in first case, but if that's the case, then still start modifying your portfolio.
Well, it's that time of the year when you will be approached for new insurance policies or plans. And while historically tax